Good morning, everyone. Let's see here. Mark, is your email not your name? Yeah, it is. Okay. I see the signature now. That was in my spam folder, but I do see it now. I'll see about that. Morning, Tim. No, not by choice, Mark. Hey, Eric. Craig, good morning. Timothy, Nancy, Robert's here. Mm-hmm. Hey, BB. Morning, Walter. And we have Infinitely on the YouTube stream. Yep. There we are. It is February. Got here quick. I'm doing all right. Hey T, Arturo's here. We're waiting on Roger to jump in here, so we'll be going in a few minutes. Everyone get their text and emails. Room's pretty full, so I would assume. I know the Telegram right now. Hey Randy. Perfect. Hey Ken. From the Big Island. Cool. Nice. What it's early for you guys, isn't it?
Oh, let me turn this. Go.
Yeah, 6 a.m. maybe, roughly.
Hello, as everybody. Hello, hello, hello. Hope everybody's doing. Sorry, I'm in the middle of like thinking about trades. Like there's no tomorrow. Like the timing right now. Oh my! Look at the Adam. Affirm 30%, 40, and not done. Look at you, Adam. I guess you're getting benefit out of the trading pit, I would imagine. By the way, wanted to share something interesting with you. Uh, today marked the 100th trade that we took since we launched the trading pit. Uh, yeah, the 100 trade. I have no idea how Moderna's doing. I'm not looking at it right now. I think Moderna was a free trade I gave you guys for seasonality. Um, and 100 trades. That's right, 95 winners. Or scratches. Not all, sometimes we scratch a trade, a cent here, a cent, but 95 of those, 95 trades. I think everything is down today. I was just showing people. Let me show you guys something. Let me share my screen. Screen number 6. This is my entire. This is my entire list of longs. For My entire list of longs, the entire list. These are all the longs I have to work with today. Right now, look at this. Hold on. Look at the list of shorts for today. It's like, I don't know, maybe five, six times bigger. It's the first time we've seen that in a long time. Hey, Ivan, how are you? Yeah, everything is bearish. But you know what? Oh, I really like this trade right now. The reason I'm not focused on you guys, and I apologize, is because I'm really focused on this downside move. And there's a stock that I really like. Let me just take a look at it. Let me see if it's on the scanner actually. Usually strong, unusually strong, and it really wants to go up. Nah, I shouldn't do it. Market's not high enough for. I'm just thinking out loud. So I'll tell you what I'm looking at right now. I'll just give it to you as a freebie. Some of you may want to take it or not. Here's my thinking right now. Okay, here's my scheming. This is a freebie for you. So you see the stock CL? Look at how it's responding right now. Look at the relative strength and see how it's responding right now. And if the market starts coming back up right now, like this, I don't know if it will. I wish I did. But if I'm talking about Muhammad, the trades that I give you the entries and the exits for, not trades that you take here for free. Big difference. This is a learning program. This is not a trading program. Although I give you guys a lot of bonuses. So you see, if this comes up, this is the S&P on a 5-minute basis, and it looks like we may have an inside day because we have earnings coming up tomorrow. These are just all the things that are going through my head within a second. Uh, I don't know what you're talking about, Muhammad. URN 30 cast. I'm sorry, but I don't know what you're talking about. 30 cast. Anyways, um, but welcome up, Muhammad. Welcome. So if we have an inside day today, and if the S&P comes up a little bit, there's a good chance the stock that's trying to break out right now, we'll, we'll get a little tailwind and it'll break up a little higher and start coming up. Anyway, I'm just thinking out loud right now. These are the scheming things that are going through my mind, but that's what you guys come here for, to hear me and see me scheme. All right, how is everybody doing today? How's everybody doing? I can't believe it's Thursday, Matt.
Yeah, I got here fast.
It got here really quick, right? I mean, how did
Yep.
we get here? Mamma mia. All right, the room is filling up. Did everybody get their Telegram alert, their
Already
email?
checked.
Check.
Everything went out.
I'm doing well. I'm well, Susan. I'm not in pain anymore. Thank God. I am so happy. I am just relieved that I'm not in pain. A little tired, just stressed out. I want to make sure you guys do well. Although me being stressed doesn't really help you guys out in any way. But all right, let me pull up my. Somebody asked me a really good question, actually. Here. Huh. Okay. Somebody asked me a really good question. I don't know about bottom fishing on Disney. Uh, the question was, and here, just let me give you a chart so we can have illustrations while we talk about this. So two things I wanted to teach you. There's a lesson here, a good lesson here. Yeah, I feel better to the short side than the long side today. All right. Okay, so here's the question. The question was, Roger, the Fed said yesterday. So let's talk a little bit about the Fed since the decision came out yesterday earlier. Good for you, Susan. I'm sure Matt will get that.
Mm-hmm.
Uh, a question came up yesterday. The question that came up yesterday was after the class was, hey, Roger, why did the bond market I will just bring it up later, Timothy, after I finish with everything. The question was, why did the bond market go up yesterday if why did it go up yesterday if the rates are not going to go down in March, right? It's a fair question, right? I'll tell you why. Because the truth of the matter is, the economy, you see, the markets discount everything that's known. It is known and believed right now with a very, very high degree of certainty that rates are going to go down soon, that we're on a trajectory to go down, not on a trajectory to go up. The fact that something will happen in March versus May or July, it's not going to be that significant for the market because the trajectory is already set. Now, here's where it gets. If the Fed now starts coming back and saying, well, we thought about it, we promised we would, we thought about it, and I'm doing well, Art. Thank you for asking. And and what if we can't get it to, what if the economy starts turning back the other way? Well, then the bond market will go down because right now the trajectory is rates are going down. And that's why the market is so bull. It's one of the reasons why the market is so bullish because the trajectory is where rates are going down. That's why it's very, very difficult, especially on a long-term asset like TLT, which is what we're looking at right now, which tracks a 20-year plus. Now, anything 10-year to 30-year, they track each other with a 98% correlation. Literally, you could trade the 10-year, even the 5-year, but anything below the 5-year, you start getting uh, uh, more volatile swings, more reactive swings, if you will. Um, Market realizes that has been wrong about rate cuts made TLT. Cyrus, TLT going up means interest rates go down. So what you're saying isn't it's not making any, to me it's not making any sense. But the point is the Powell, see, this is the interesting part, and this is the part that I keep talking about. Notice I'm not picking on Powell because Powell has been very, very clear for the last 3 or 4 times he spoke. He hasn't been sugarcoating anything. He kept saying yesterday, "We don't know. We'll see. We'll be." He's got the wind in his back now. He doesn't have to win, so he doesn't have to be defensive. What he's doing is working. Okay, fine. It's good for you. You could have started it a year earlier, but we don't talk about that. But the point is, he's just, we don't know. We don't know what's going to come. He's not lying to you. He wasn't spinning anything yesterday. He really wasn't. I was listening to it. Matt, was I arguing with anything he was saying?
No.
No, I was just kind of listening, going, yeah, there, yeah. He's like, he took a position yesterday. The position was interest rates. I cannot see charts or you. You guys could see me and you guys could see my monitor, right? Matt,
Yeah.
you could.
We see TC 2000.
Yes, yeah. Okay, good. All right, all right. It's on your end, guy. Whoever says he couldn't see me, it's on your end. And there we go back down again. Notice that CL is staying up, staying up. I love it. But VIX is rising. That's the important part. Remember yesterday's session that we had at 11 a.m. Okay, the bottom line is this. Yesterday's news was really good news. It just wasn't as good as the market expected it to be. Okay, but it wasn't bad news. I don't think the Fed is what's driving these stocks at all right now. I think that's pretty neutral. I think it's mostly 80%. I think it's earnings right now. And the layoffs that we're seeing, I think what we need to do right now is start focusing more on the market and not on the Fed. You can't see me on Zoom. Well, I'm seeing myself on Zoom right now.
I see you.
Good enough, good enough. So I think it's the earnings. Earnings have not, on the big techs, have not, forward-looking statements are not great. So far, earnings have not blown, FANG stocks have not blown anything out of the water. Um, and by the way, look at that CL. The market just went down. Here, let me show you. Just went up. Yeah. Well, not one person has said so far that the Pro Trader dashboard does not work. That's good. So that's the reason why the bond market, that's the big reason why the bond market is still is still moving higher. It had good, everything he was saying was great yesterday. It's just people want it faster. They want it now. Earnings, they're coming off not so good right now. Now, in terms of, that's the first thing I wanted to show you. The second thing I wanted to show you is the power of relative strength. Look at this market in the last 10 minutes, since we've 14 minutes since we've been talking right here, this area here, market has not gone up. It went up and then went right back down. Meanwhile, the strong stock is persistent. It's persistent above this level. If the market goes up, and I don't know if it will, but if this market goes up, the stock should go up really, really nicely. Look at this relative strength. Nice. And volume is good too. Look at that. Nice little volume pumped in. All right. That's now, this, I could talk about this because we're out of this trade already. So yesterday in overnight, you guys wanted an overnight trade. I gave you this trade in the dashboard yesterday. Okay. I want to teach you guys a good lesson here. This stock, I know you can't see it here. You'll be able, hold on, let me show you a big, my other chart. What I gotta make this. Hold on a second. Where is that damn? Where is that stupid thing? Edit plots. No. I'll just do it some other time. I wanted the thing to show up a little better. Not showing up. Anyways, you can't see it right now, but this stock belongs to a here, maybe over here you can see it on a drill down. There it is. Here you can see it. This is good. It's a basic material agricultural output stock. Okay, that's the kind of stock this is. All right, this is important. The first thing I did today, we're not out of DD yet. We still have like 20 days on that option. Elizabeth, if you have a question that's unrelated to what we're talking about, send me an email. How about that? Does that work? I don't want to interrupt the flow of 300 people. It's not cool. Okay. Right here, we have Moss. Okay. Now, yesterday I gave you the stock. This morning, the first thing I did this morning when I came in the office is I look at my sectors, right? And I looked at the strongest sector. And the strongest sector was consumer defensive. I think it was consumer defensive. Yeah, it was consumer defensive. And when I looked at what the strongest consumer defensive sector stock was, it was agricultural output. Let me show you. Where's that agricultural output? I saw it here a little while ago. But anyway, agricultural output. Huh. Why do things disappear on me when I'm ready to show them to someone? I don't see it anymore. But it was and it was really, really high up. Okay. Basic materials. Hold on a second. Oh, yeah. Thank you. It wasn't consumer defensive. It was basic materials. Thank you. I was thinking consumer defensive. Thank you. I've been watching charts too long, you know? And by the way, that CL is breaking higher right now, while the market is breaking lower. So I looked at this. I said, "Oh, holy moly! The stock is going to do, Moss is going to do very, very bad." So I went here, and I saw this, and a little bit of this. But this is what I said. I said, "Holy, oh, why did I sell a stock doing that?" And then I looked at the chart of Moss, and this is what the chart looked like. Gapped up this morning, like this. This was the morning candle, and it came right back down right here. Moral of the story is relative strength, the daily chart. Why did I sell it? Because it broke this low yesterday. Relative strength and relative weakness. And by the way, CL, a boom, broke. Remember, it was below this level. It's now above this level while we're having this conversation. And while the market is doing this, I give, I should start charging again for this. I give people a lot of free stuff right there. Look at that right there. All right, let's continue. I'm having fun with this today. So we have the biggest earnings market cap wise after the market closes today, the biggest one. What does that mean? If you take Apple, if you take Meta, and if you take Amazon, you're going to get the largest market cap in the world of any company because Apple now is smaller than Microsoft, right? Before I would just say the biggest and then some, but now I have to be specific. So Apple's part of it too now, okay? So you got Apple, uh, Timothy, everything I said about CL, I said live here while we were talking. That's all I'm going to say. You interpret it any way you want to, my friend. All right. You know, you kind of have to read between the lines sometimes. It's your choice. You take it or not. I'm showing you a stock that I'm telling you how much I like. I'm telling you that it's breaking out while the S&P is just kind of sitting there. I'm telling you if the S&P goes up, this thing is going to go up. You decide. I'm not telling you anything. I mean, all right. So let me continue my analysis. So thank you, Adam. So the point is we have the largest market cap, which means nobody in their right mind, unless they're insane, is going to make large bets, especially in anything surrounding tech or consumer discretionary. Why? Because Amazon tech or consumer discretionary? It's hard to answer that question. When they were a bookseller, it was really easy to answer that question. They're both. They're both. It's most companies, and this is what I tell people all the time. In 50 years, you won't be able to find a company that's not a technology company and doing something else. Everything's going to be a technology company. Walmart is a technology company now. GE is a huge technology company. Okay. So anyway, if I put 100 people in the room and I ask this question, I'm going to get a 50-50 answer. Seriously, I'm going to get a 50-50 answer. It's a very hard question to answer because it's both. It's both. It's or whatever it is. But but the point is the paramount point is that we have to be careful. It's not about finding the best trades right now. It's about staying out of trouble. We have to be careful. We have to be very, 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 very careful. Congratulations, Susan. Go ahead and mark that one too. Uh, so we have to be really careful. We have to be very patient. So I'm going to give you stocks. I'm not suggesting you go all in on these stocks, and I suggest you weigh your options very carefully. My job today is only give you stocks that are on my hit list, meaning stocks that I'm looking at tremendously. I'm trying to keep you out of trouble. That's why I'm giving you less trades. So let's look at stocks that I'm really liking right now. That's one of them, actually. You know what? Why don't we start with the shorts and then we'll do longs? Since we're out of this stock, I could talk about it now. All right, Mark. You know what I'll do? I'll let Matt guide the chat. I'm going to close the chat for the next 20 minutes, okay? How about that? So, and if somebody has a question, Matt can answer the question. So this is a daily on Mosaic. Our stop, if you guys want to take a swing trade still on this, is 32.71. I think there's more room to the downside. The stock is still consolidating. It still has a breakdown potential. If we look at the option chain, which we'll look at right now, we're going to go 15 days out. probably better to look at puts, right? Calls aren't going to get us very far. 15 days out, February 16th expiration. We're going to hit it with the 32 strike price. Actually, 32.50. 32.50 right here. Right here. Okay, let's continue. Another swing trade stock that I like. I like this stock. I think it's just beginning. My stop would be right here, about 45, 11, 12. We would be buying the 40 strike price. We would be right here. These are expensive options. I'll tell you that. Pricey. Anyway, but that's what we're working with here. Next one, UPS. Oh, I like the stock. Has more downside. Go down right here. I've been talking about the stock last few days. 151.38. Right here. It's a stop loss. Look how good it looks on a 5 minute. Straight down. Straight down. So right here. There, stop. We would go again to the February 16th expiration. We would go to the 145 strike price right here. Another one for you on semiconductor. Gonna have to take a look at this when we're done with this broadcast. This one's looking really good here. 78. Actually, I would use the 50-day moving average right here, which is kind of close to where we're at. 70, I would give it a little more, maybe 77.30, but we're splitting hairs, I think, pretty much. Well, actually, no, it's about $1 higher. I like where this is going. I like where this is going. We would look at some good trade opportunities today. Day trades, I think. 73 strike price right here. Not that expensive. I think this puppy can go a little bit more. Not ready yet. This one is ready. Stop at 30, right at the 50-day moving average. This one has some downside potential. 15 days till expiration. You would go right here to the 30 strike price. I've mentioned this stock at least 10 times in the last 10 days. I would argue with anybody to correct me and tell me I haven't. Sell it right here, sell it right there. I think it's getting a little overdone for the short term. Maybe a little bit more. So I'm not going to give you a new position on it. If you're on this, I would get out with the meat of it and hold a runner. Forward is moving backwards, right? Okay, that's the short list. Bonus round, bonus round, bonus round, bonus round. Set your alerts for this. Barbara, a runner means, well, let me give you an example. You see the stock that I was really liking when it was down here, CL, about 28 minutes ago when I showed it to you guys and told you how good it looked. It was about 58.28. So say you get out right here at about 85, hypothetically, of course. Let's say you get out right here at about 85.64. And let's say you have 10 shares, hypothetically speaking. You could put your stop loss to break even, which would be right here, and then hold those two shares, maybe another 50 cents with the thought that you are going to get stopped out. It's just gambling. We're gambling with winners, not losers. Okay? That's what a runner is. Okay. I like that CL. It's good stuff. Okay, so bonus round, bonus round. See this right here? What do you think it's going to happen to FedEx if it breaks below? Now, just to give you a little prelude, see UPS, you see FedEx. I think I've said enough. Um, your stop loss would be right here at the 200-day moving average, which is about 250. We're not there yet, by the way. If it breaks, everybody likes a bonus round, right? 250 strike price right here. Yeah, that's a good one. Yeah, it's got a good delta. And oh, it's actually really cheap too, but we're just not there yet. 250 strike. But you may want to write it down. Okay. Let's now everything we're going to be talking about is going to be to the long side. Just to be clear, we've been talking about puts. We're going to start talking about calls, okay? Okay. All right. All right. All right. One thing for obvious reasons, you could see the volume right now on the SPY, 26 million. We're about halfway done with the day. Average volume is about 80 million. So you could see what's going on today. I'm not making this up in terms of, it's a very quiet volume. All right. Let's now talk alongside. The stock, you might have seen it before somewhere. I like the stock. I think it's got more upside. I'll put my stop right here, 82.69. I would switch this over to calls. 15 days out. This is perfect. 82.50. Yes, ticker CL, Thomas. Sorry about that. CL. A line. A line is crossing the 200-day moving average. It's aligning. I'd probably like to see a strong close before doing anything, but again, your risk is going to be kind of high here because volatility is strong. Let's save this for another day, okay? It just doesn't look as good as others. Merck, 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 Merck. Put my stop right here, about 118.40-ish. Um, I'd go to the 120 if I could. My 5 cents there. And by the way, look at the market. Market went up. Oh, I got stuck. Hold on a second. There we go. 1 second. The market went up. And look at what happened with CL. From right here, right there. Let's see if we can cross the VWAP. We're right now, see that? We're below the VWAP. We're touching the VWAP. Let's see if we can go above the VWAP. That'll be very interesting. Merck, the option would be the 120. 120 expiring February 16th. Real low volume on the SPY. Oh yeah, Pravin. That's why the stocks I give you here are called swing trades. That's why the options I give you are 15, 16. There's no settings on VWAP, Scott. It's just a VWAP. I just eliminate the deviations. Ooh, man, look at that CL go. Anybody make money on CL? I know some of you did. Probably still in it. See? We're in it now. Yes, yes. All right, let's continue. Let's continue. Oh, I love it, love it, love it, love it. Okay, cool. All right. So, yeah, yeah. The stocks I'm giving you guys here are for swing trades. The stocks I give you in the day trading room are day trades. But if I'm seeing something and I'm looking at it and it's already on my swing trading list and I see it going up, I just kind of feel bad not giving it to you since I'm already here, you know? All right. All right. Pravin, I think you're misunderstanding. This is not a service where I answer your questions. This is a service where I give you what I give and you take it and you're happy with it. Stop asking me questions. I'm not going to answer those questions. If you have a question for me, you can email me. VRT. I've been talking about the stock for how long? Somebody here can tell me actually. I don't remember how long I've been. That's why I'm asking. But I think since here and nothing has changed. And I still think it has some upside to go. Stop would be about 51, 57. Good, Huru. Good, good. 51, 57. 2 months ago. Yeah. Oh, Matt, get that. All of that.
Got it.
Yeah. Um, 56 strike price still looks good, but don't go big on this. It looks like it's getting a little parabolic on us. It does look great. Yeah, it does. Okay, next few are interesting, and these are new to our list. Um, this is a railroad company that's actually in Jacksonville. Their building is in downtown. I never knew that.
Yeah, their corporate headquarters are downtown.
Yeah, yeah, I never knew that till I moved here.
Well, Jacksonville's a great place for the railroad because you have
It
I-10
is
and 95.
right, right. Very, very true. My son took the railroad, I think, to somewhere from here, and he said it was actually pretty cool. Um, 3250, CSX, February 16th expiration. Cool. Oh, you get that, Matt. Both of them. Pretty good. But I still like the stock. I like CSX. Stop loss would be 34.32. A nice stock. 32.50 strike price. Man, look at that CL go. Ooh, baby. Look at this. I like picking them live too. Yeah, it's awesome, Robert. Okay, let's continue. EWJ. This is where things get a little interesting. This is a Japanese index, okay? And J Japanese markets are starting to move. These are the type of stocks we would trade in bargain or ETFs we would trade in Bargain Hunter, by the way. For this, I would probably go 43 days out and I would buy my stop would be at about 65.17, and I would more likely than not buy the 64 calls. Not that expensive. And then you have exposure to the Japanese market, which is kind of cool. If you guys are in CL, I would take my first profit target at about 85.70 and then hold a runner from there. Okay. Greg says on the stops, do you wait for cross or just I look for price action to send me an alert and then I analyze it and then I'll manually get out. I don't use firm stops on anything. I wouldn't use firm stops on anything. Okay, another one. Check this one out, Matt. India. India's starting to move. Now, here's the problem, guys. Don't try to day trade or even swing trade. These are positional. Why? Look at how spotty they are. So you got to be really careful with these, and you got to have a long-term view, longer term view. Um, but look at how the options are. They're not that bad. You can get a go pretty deep here, actually. Look at this. You're literally paying there's like no implied volatility on these things. Okay. Yeah, there's that level that I mentioned on CL. So those that listen to me and are closing CL, um, now you could tell me how much money you made. All right, there we go. You can copy all that down now. I love this room. Okay, let's continue. CLS. It's gone parabolic on us. $30 as your stop loss, $15, 15 days till expiration, February 16th, ticker symbol CLS. CLS. We would go to the 30 strike price. Look at intrinsic 580, 577. Same price. I mean, you're not paying a lot of money for this. Yeah, Laurel, I do. I do. Um, check out the chart on this one. Matt, look at this one. Isn't that something? I mean, talk about
It's not a huge return, but I mean, you just can't
well,
miss.
right? And they say technical analysis doesn't work. I love this chart. I'm curious how long it's just going to continue going up.
Well, you know what stock looked like that for a long time?
GE,
But there's another one.
which one?
It was an oil stock. Let me confirm. It was Marathon. Look at Marathon from like June of last year
What's the
to
ticker on Marathon?
MPC
Oh yeah, MPC. Thank
to
you.
June to September.
Oh yeah. Last year,
Yeah.
right here.
Yeah. Look at this, just flat. Just
Yeah. They can go like that for some time too, you know? Yeah, very true. So let's VST break this down. Cool, Alan. Very nice. Very nice. Stop would be about $39, if you will. February 16th expiration. Ticker is VST. Oh, look at that, Matt. Brett's commenting on the strike price would be 30, right here, 39. 39. They're not expensive. Cool, Doug. Cool. I mean, you're paying 10 cents premium out of intrinsic, you know, not much at all. Um,
oh, nice. I see what you're talking about now.
HWM. A little sloppy. I mean, wow, look at this intraday. A little sloppy, but but look at the longer term trend. Stop at about 54.68-ish. And you're about 15 days till expiration. Ticker symbol HWM, February 16th expiration. And there you're gonna have to make a market for this, folks. About 65. Excuse me, 50 strike price. 50 strike price. One more, last one. This one, IR. We've talked about this one before. This one is the opposite of sloppy. Look how clean this is. Again, I want to emphasize it's not always about the stock. It's how does the stock move? How does it react? Look, it's not where it got, it's how it got there, okay? Cool, Robert. Wow, we got a lot of people making money today. I like this. This is good. No wonder we get over 300 people a day here. Okay, stop loss is at $78 and there's no options on this baby. I mean, you can go to 80s. I prefer you wouldn't, but you could. There. I mean, you could do the 80s. You know what? I'll tell you what. I'll tell you what. No, I was gonna say if you're gonna do the 80s, do the further outs, and but they're even worse. So that's not a it's not a good choice right there. All right, that is all I have. So again, today's going to be the last day. We're going to be super, super, super extra cautious along with the market. Volume is half of what it should be, but not a half, but about two-thirds of what it should be typically right now. I think it's going to gear up towards the end of the session because I think a lot of folks are going to be making earnings bets. Nobody ever listens to anything I say, but my thank you, Adam. But my theory is that we're going to see we're going to see some buying because what will happen is the odds are not all three reports will be bad, and I think that we've seen some already negative ones. I think we may see some upside action. So we got to be really nimble. We don't want to get stuck to the short side, and we don't want to get stuck to the long side. We kind of, we're kind of like on an we're right now in a very, very delicate balance, and I want to keep that balance because if we move to one side or the other, we could really find some pain, really be in some pain, and I don't want anybody experiencing any pain. One of the negative things we have going for us, there's a talk that there may be a fallout in a regional bank in New York. Regional bank fallouts and banks make people very, very, very freaking nervous. Okay. Volatility is moving higher right now. The markets are a little bit iffy right now. We don't want to spill anything, Julian, in this market at all. So we got to be extra cautious right now. I'm going to give you as many trades as I can in the pit and everywhere else, but we got to be extra cautious. We're going to start going a little further out with options. We're entering a period of uncertainty, and that whole January effect is behind us. And February isn't always as great in the market, and I think we need a little pullback. I think I would really love a pullback. It's getting very difficult for me to gauge strength on the upside. It's getting very, very difficult because the markets are performing so strong. Um, so watch the financial sector, watch the regional banks, watch the bond market, and obviously don't overreact to earnings that come out tonight. Don't overreact. I've seen crazy things when three FANG stocks come out with earnings. Crazy, crazy things. On that note, Matt, take over, and I'll see you guys tomorrow. Any comments, questions, or anything else? Roger at rogerscott.com. Oh, thank you. Thank you, Michael. Go ahead, please.
Yeah, I'm going. Just wanted to read the chat. Hold on, I got stuff to copy.
All right.
Almost there, folks.
Take your time. We're not in a rush.
One more. All right. Well, you've been seeing it already. And if you're struggling to see something or see a reason why I had it up, it's only because we look at it every day. There's no other reason that this should be up. It's pretty uneventful. Uh, Not a single profit factor above one, with the exception of energy. I'm decently bullish on energy still, but mm, yeah, I don't know. This is too volatile, or the potential for being volatile is really high. Let's see here. On the short side, again, accuracy is really low. Maybe consumer discretionary, maybe financials, and maybe communication, but you'd be forcing it. And if you've not heard me say it before, I feel like I say it almost every day. Seasonality is not something that you want to squeeze. You're not trying to, you don't want to force seasonality. It's not something that you can look into and like extrapolate some grand pattern and this connection. It needs to be right in front of your face. It's very obvious. Like if all the big tech companies went up the same time this year, every year for the last 15 years, then we're like, okay, we'll use that maybe partially in a trade thesis. But uh, this, no good. Let's go to 10-day hold. Um, Mixed across the board. I'd say decent strength in industrials for a 10-day hold and energy as well. Everything else is just quite not good enough. Let's go to the long side. And we'll grab the number. Oh yeah, the number is disappointing. 126. It's not very good. That is, I don't even know if that's passing. That's a C minus at best. Uh, Top setups, if there is anything, folks, bear in mind earnings too. If you take any of these by looking at them, the earnings dates are right here for your convenience. We looked at Northrop Grumman yesterday. It's still on there. It's still long, according to seasonality. Hormel, consumer staple. You were saying consumer staples were leading, right, Roger?
What? Yes, I like consumer staples in healthcare.
Let's take a look at Hormel. Uh, well, if you're a bottom picker, maybe, but that is man, what a great short that would have been, just all the way down, especially this day. Uh, GE is a long seasonally. Industrials were strong, and GE looks great on the chart. Yeah, same kind of pattern there, just moving up nice and slow. See Granger with it. Don't see. Yeah, Granger looks fantastic too, but it's an expensive stock, $908. But the options are about, yeah, $20. But if you can swing it, it's not bad. But if you took the Fastenal trade yesterday and you're in that Fastenal trade, don't take the Granger trade because they're extremely correlated. I mean, they're direct competitors. So you would be really, you've had a lot of exposure to the same sector. That's what I meant to say. We're getting pretty weak down the list here. Hershey's. We're trying to find a consumer staple. Looks better than the other one we looked at. Looks if it can get over 200, I'd be more confident in a trend reversal. So you got this peak right here, and then a dividend sell off after that. I'd stay away from financials personally, especially Aflac. They really missed on earnings. Uh, Oh, that looks great. Chubb. Although, again, probably want to stay away from financials. That looks awesome. Might need to give it another day. I don't, I guess it had earnings yesterday, 2 days ago. Earnings 2 days ago, conference call yesterday. You'd want to wait to see how the market digests that before jumping in. And we are pretty much grasping at straws after that. So we'll jump over to the short side. All right. We're 103 to the short side. So we're really just in a consolidated period seasonally, according to this. Got INCY. That's decent number of trades there. Oh, so it did bounce off the 100-day moving average, but if it falls, that looks like a nice setup developing. I would set an alert for, you can watch me do it because I'm going to do it too. Or $58. I'll see what the market's doing by then. Randy, did you look at the Aflac chart? I don't know if I think I had it to the side. They missed pretty good, but they did bounce off the 200-day moving average. So I wouldn't trust it. That's a weak floor to me. Uh, we looked at INCY. Westpark doesn't have a lot of trades. Canadian dollars pretty weak seasonally. AMT. This is a trickier one for me. Let me make sure it doesn't have earnings. I'm not going to waste my time looking at it. End of February. Roger, do you still have the screen up?
By what?
You still have the screen up?
Screen up. What screen? What are you talking
Like the
about?
meeting? Are you still
Yeah,
on the
I
meeting?
still have my screen up. What?
Okay. What do you think about this short? I'd love to know your opinion.
Hold on. Oh, AMT?
Yeah.
Uh, doesn't look all that bad. Although I don't think I would give it all the way to 194. I think I would probably give it to the middle of the channel to the VWAP. But it doesn't look bad at all. But why do you ask?
No, I meant for a swing trade. Sorry, look at the right side. Look at the daily.
Oh, the right side?
Yeah.
Yeah,
This
I
is the
like it.
daily
It's got
chart.
it's got it's got enough to go to 189.
You think it's going to test?
Yeah, I do.
That's the
I
100
do.
day and the 200-day moving
Yeah, I
average.
mean, look, it gave out so much longer before the market did. When the market was still going up, this thing already started going down.
Yeah.
And it hasn't responded to any bullishness at all. So yes, I like it. I like it for a swing trade. I thought you meant like right now, day trade. I was
No, I
looking at
meant
the
the
left
chart.
side. I do like it. I do. I do. I do. I do. I do. You caught me off guard. Sorry about
Yeah,
that.
that's okay. Oh, little present for you there.
Oh, Dish. I haven't looked at Dish in a long time.
I'll pull it up.
Let's see how, is that a short?
Yeah.
We haven't been wrong on it once yet.
Did they change their
Yeah, they did. They did. They did. I don't even know what it is anymore. I just stopped looking at it.
because it's not coming up. Does anyone know what they changed their ticker to?
Uh, I'm sure somebody here can tell us. Anyone know the ticker symbol? Sat. Oh, Sats. Okay. Sats. You
Sats.
wouldn't have it here because it remember you're looking at large caps, Matt. So, but remember, this is seasonality. So, but you could look at the chart of sats. Yeah, take a look at the chart sats.
Uh,
Flip over to TOS.
yep. SAT.
Put a weekly chart on, would you?
There's a weekly.
Yeah, a shitty company. Yeah, see, I think the stock is going to go down to $8 a share.
Are the options?
That's what I think. All right, I'm out of here. All right, I'm going to just tune out.
Yep, I'm
Mhm.
pretty much done too.
Yep, no
That was my
problem.
last one. Uh, the options aren't bad.
They're pretty cheap.
Yeah, but they're tight.
Yeah, people play the stock, you know.
Yeah, I would. It's hard to borrow though. So if you're an underlying trader, must be a lot of short interest. All right, folks, that's all I see. Pretty short list today. Not a lot seasonally. I won't be here tomorrow,
I'll be
but I
working
will.
with Clyde. Clyde is going to replace you tomorrow,
Clyde
Matt.
is going to do a much better job than I am. And I will send over the seasonality weekly graphs to Roger.
Oh,
I'll
I
just send a
appreciate you doing
picture
that. Thank you.
so you guys
Thank
won't
you.
miss it.
Bye, guys. I'll see you.
See you,
I'll see you
everyone.
later. Bye, everyone.
See you Monday.